Welcome to Bookkeeping Basics for Beginners. Whether you're starting a small business or want to track your personal finances, today I will go over essential bookkeeping principles and methods. First, what is bookkeeping? It is the process of recording, organizing, and managing financial transactions for a specific period. Bookkeeping provides crucial financial insights that support better budgeting, help with accurate taxation, assist in securing loans or attracting investors. It is the key to making informed financial decisions. Revenue, that is the income your business earns, like sales or service fees. Expenses, and as you know, that's the money your business spends, like rent, utilities, salaries, or materials. Assets are resources the business owns that have value, like cash, inventory, equipment, and real estate. Liabilities, which are debts or obligations your business owes, such as loans. The equity, that is the owner's claim on the business after liabilities are subtracted from assets. It is the net worth of the business. So, when setting up a bookkeeping system, you'll typically choose the double-entry bookkeeping, which is the most common method for businesses because it records each transaction into accounts, one as a debit and the other as a credit. This system creates a balance and allows for accurate financial tracking. The essential books are the general ledger. This is the master book that consolidates all financial transactions recorded in other books, organized by account. The ledger gives you an overview of your financial activity. Then the cash book, which specifically tracks cash transactions. Subscribe to like and share. Sales journal. This is where all sales transactions are recorded. Purchases journal, that tracks all purchases your business makes. It's particularly helpful for inventory-based businesses. Payroll records. Keeping detailed payroll records of workers is essential to ensure compliance with tax laws and to track employee expenses accurately. With organized records, tax preparation becomes much simpler and you're less likely to make costly errors. Good bookkeeping also provides financial transparency, which is crucial for making strategic business decisions and building trust with potential investors or lenders. Important tip: record transactions daily to avoid being overwhelmed by a backlog. Use bookkeeping software, tools like QuickBooks or QuickBooks Online to simplify the process. Keep separate personal and business bank accounts. Reconcile regularly. Compare your records with bank statements monthly to catch any discrepancies early. Seek professional help when needed. In concluding, just remember, good bookkeeping is the backbone of financial stability, so keep things simple and focus on accuracy. These are the foundational concepts and basic steps for beginners. Let me know if you'd like to dive deeper into any specific area or add advanced concepts. Thanks for watching.